All right, let's get into it. It is Tuesday, 3rd of March. No trades again today. Just going to go through the move on the S&P, my notes for the trade or the day, what I was looking for. And yeah, why I didn't take a trade. So pretty much there was a lot of stuff in place for the trade to take place. But there was two main factors. The first being price came back to the bottom of the range, or the AM range, and I missed it because I basically got asked a question at work right as this candle was forming here, this up candle here. So I had to step away from my desk for a couple minutes. And then the second trade, due to the reaction that we saw from the New York Open, I just wanted to see how price was going to move off of this midpoint test. And if I had taken the trade or if I had a limit order in, I would have been stopped out by like literally a tick. So that's 6785.45. I know you heard that as well. And also 6785.6. So yeah, literally one tick that I would have been stopped out by, probably more due to spreads before price went in the direction I was initially anticipating and in line with the model. So bring it all the way back. What was I looking at today? So as you can see, price fairly bearish, just creating lower highs, lower lows. High time frame draws. We got this 4-hour low here. And yeah, you can see swept previous daily low. Price then comes down again. So we get my notes up here. 8:03 New York time at the moment. Price currently hovering above the previous daily low after trading below in the London session, waiting for the 15-minute candle to form. So this was at 8 a.m. pretty much. This was this action here, I believe. Well, below the London low. So 8:03. Yeah, so it's just hovering above here pretty much. And it was this that I was talking about. Waiting for the 8:15 candle to form. Marked that out. And then I was looking for a break either upwards or downwards. I marked out the London high, Asia low, Asia high as potential draws. You can see we're now there coming into the PM session. And yeah, my initial idea was just previous session highs and lows been marked, noting that we're currently trading back into a bearish 30-minute and 1-hour fair value gap, but there's a 4-hour fair value gap at the London highs. So what I meant by this was we were trading back up into this here on the 1-hour chart as well. That is also a fair value gap there. However, on the 4-hour, so that's the London high and the Asia high there. Nice little gap. And I would anticipate we see a reaction from there. So I was kind of toying with the idea of, which way is it going to go? Are we going to continue downwards off this, which we did. We then traded to the 4-hour low, and now we're heading back up there, which is interesting to me because, there's always a bit of uncertainty, but usually the higher time frame bias does take precedence over the shorter time frame or lower time frame bias. And from there, also 4-hour low that can be a target before the London high. We'll keep an eye on the break of the range. So if price broke downward, I would target a 4-hour low. If price breaks upwards, target London high, only if the entry criteria is there. So at 9:12, I said the price looks bearish, and 9:12 is here. So we had broken down from the range and it was coming into the market open. So really, this was a really nice move today. Um, I'm glad I didn't take the trade just due to a little bit of uncertainty, and I saved myself a loss. But ultimately, if my stop was 6 points instead of 5 points, then this would have been a nice trade today. It would have secured me. Let's do that. Bump it up to 7.8. Was it 7.84? Bump it up a point to there. 348 pounds. So yeah, as I mentioned, from 9:31 to 9:33, there was 3 1-minute candles respecting the bottom of the range, and price dropped. I got asked a question at work as this was taking place. So, whoops. That is this checklist here. Marked out the 8 a.m. range, marked out previous session highs and lows, checked the volume per 5-minute candle before open. Pretty much all of them were above 1,000 volume. And then I waited for the breakout. Midpoint retest / 3 candles respecting the range. There was, yep. SL and TP placed. It was marked out, but I didn't place it. TP or SL done for the day, or no trade. Today was no trade. And yeah, I waited for a retest and no entry yet due to uncertainty. Would have been stopped out by a tick. I would have literally been wicked out, which is a shame, but also I'm fine with not taking that today. Buy opportunity still possible, but unlikely to take a trade. Noting the 8 a.m. range is 12 points, and it's maybe worth using a 6-point stop loss for days where the range is more than 10 points, because it's just a bigger gap, and price can wick. It can also go the other way. Likely we hit the 4-hour low if no return to midpoint by 10:05. So at 10:05, we were chilling down here, and I was thinking maybe there could be a buy opportunity around the time of the entry. If price broke above the range, then I could maybe look for a retest back to the midpoint to then target that London high, but we just didn't get that. So yeah, 4-hour low looks certain at 9:57. 10 more minutes of waiting, then done for the day. Done for the day at 10:07, and just waiting for price to take the 4-hour low, which was taken at 10:17. So you can see here at 10:07, this was me done on this candle, and price was just like consolidating just above that 4-hour low, and I was just like, come on, take this low, and we finally got that. So overall, pretty nice day trading wise, even though I didn't take a trade. Followed all of my rules. Exercised a bit of caution, like I said I would, going into this month. And I think the learning point here is, well, always follow the rules. And the other learning point is, on days where this range here is more than 10, do a 6-point stop loss if there isn't a possible opportunity. Just to add that bit of breathing room. And yeah, so that is pretty much it. As you can see here, price has since shot up off of that low. I could tell there was a bit more reluctance of people, a bit more reluctance of sellers to take the low at the time. There was a lot more buyers trying to take control, and it just didn't happen. And yeah, since then, traded up into this fair value gap, traded back down again. Then we broke structure. All of these highs getting taken. Yeah, so if there was a possible entry here, I mean, there wasn't an inverse fair value gap. No, they're all invalid, I think, with this wick. Yeah, there wasn't an inverse fair value gap in here, so couldn't look for a previous daily low, previous daily high model. And yeah, that's pretty much it. No trades for me today. We can look at Forex Factory. today, as you can see, there was no red folder American news. Tomorrow we have non-farm employment change, and that'll come in at 8:15 New York time, that is, so 1:15 UK time, and PMI at 10 a.m. So have another look at 10. Have another look tomorrow even, and we'll just see how we go pretty much. So how do I do this now? Yeah, so I'm liking how this adds like my notes in each day for the day of the week per month, and we'll just continue to remain patient. I think this is a good start to the month, you know, especially after Friday's losses. I think this was one of my biggest losing days on the account, if not the biggest, last Friday, just due to the amount of capital that I have in there. So yeah, no rush into anything here. See what other opportunities come through for the rest of the week. I wouldn't be surprised if we get a small reaction off this, trade back down, and then up to the Asia high. You know, we've got a fair value gap here. I wouldn't be surprised if a move like this played out. Something like this. Stop like that. Like that. 2.96 to 1 risk to reward. But then again, we'll have to see. You know what? I'm going to leave that there and just see how price plays out when I come back tomorrow morning to have a look. And yeah, I think that's going to be everything for me today. So with that being said, trade smart, trade your plan, trade safe, and catch you in a bit.